Hey, Bulls and Bears, how's everybody doing? JJ here. You're watching Bull Boom Bear Bust, back with another dose of economic reality, back with another dose of economic insanity, back with another blast of economic insanity. Which one do you guys like better? Back with another dose of economic reality or back with another blast of economic insanity? Please let me know. Either way, it is insane. The economy, the monetary system, what we're seeing right now in the banking system, the FDIC out there warning people, or not actually warning people, not warning people, but discussing within their within themselves, within a meeting, that they're afraid to tell people, or that they shouldn't tell people how insolvent the banking system is. So that's pretty scary. And as usual, we're going to try to navigate this together. Now, as I promised, since the beginning of the year, this channel's focused more on a solution-based informational channel here. Of course, we'll still talk about the system, the banking system, the monetary system, Fed policy, and all that, but more solution based. So stay tuned till the end to hear about how I'm trying to navigate this and what I'm doing personally to try to make it through this and maybe even make money and be better off once we get through this really tumultuous economic times that we're headed into here. There's a word I don't say too much. Did I say it right? Tumultuous. I don't think that's right. Tumultuous. Tip for anyone putting out videos and creating content: don't use words if you're not sure how to pronounce them. Tumultuous. Okay, I'll remember that. All right, speaking of tumultuous, alarming, Janet Yellen's out there with some pretty alarming um, verbiage here. Let's take a look at what she said. And here she is, our favorite Treasury Secretary. I'm not sure if she's your favorite, but sounded good. And something that's kind of scary to me, a lot of times she has this really confused look on her face. All right. Maybe she's just trying to figure out what somebody said. Maybe she didn't hear him. But she has this look on her face a lot. Let me know what you think about that down in the comments. And maybe that's just her resting face, but I am kind of scared if someone really is confused that often, if they're the Treasury Secretary. Here's what she told Axios. Axios, the website here. Treasury Secretary said she's, quote, nervous about the U.S. defaulting on its debt and cautioned that Americans likely will face a scary and spiraling recession if Congress doesn't raise the debt ceiling this summer. She continued, it would be devastating. It's a catastrophe. If the government were unable to issue new debt, the economy would go into a tailspin. Quote, spending would have to decline to match tax revenues. Unquote. To me, that's the scariest part of this right here. Let's talk about that. And folks, when you think about it, that is scary. The only way the government can continue operating is continually taking on more and more debt. That's why there's really not a debt ceiling, because they have to raise it. Otherwise, this house of cards comes crashing down, and nobody wants this coming down on their watch as far as the people in control right now. So I've always said here, it's a nothing burger when it comes to this debate on the debt ceiling. They have to raise it. Now, could something crazy happen that's never happened before and they don't raise the debt ceiling? Maybe some political upheaval happens that no one expected, and that somebody steps out of line and doesn't raise the debt ceiling. Well, yeah, the person that steps out of line is going to get the blame for everything if they don't vote to raise the debt ceiling. So I doubt that's going to happen. Maybe they'll put in some scapegoat and then protect that person from from backlash. So anything could happen, but I really don't think this is going to happen. But it's scary to think about how dependent the system is on ever increasing amounts of debt. And it's not just me saying that; it's Janet Yellen saying that. And let's take a look at some of the things, some of the programs, some of the payouts that could be affected if the debt ceiling were not raised. If we couldn't take on additional debt, the government no longer able to issue debt, of course, will run out of cash on hand, unable to pay millions of daily obligations, Social Security, salaries for federal civilian employees, military veterans benefits, utility bills that they pay for veterans, upset of global financial markets, yes, bigger rises in interest rates, yes. So as we can see, a lot of people would be affected. Now, The Guardian put it out as follows, and this is a quote here from Yellen again. quote, failure to meet the government's obligations would cause irreparable harm to the U.S. economy, the livelihoods of all Americans, and global financial stability, unquote. And something else that would happen is they would have to come after you and me to pay for all these programs. What does that mean? Higher taxes. Some people think that these programs are funded and that there's billions of dollars set aside for these programs. If they had that much money set aside, why do we have to continually take on additional debt? Do you really think there's a vault or a safe somewhere with all the money to pay out these programs? There's not, right? So the system is insolvent. And it's only because the US dollar is no longer backed by anything that's tangible. It's not backed by hard assets. It used to be backed by gold. It's not backed by gold anymore. It's only because of that that we're able to continue the way things are right now. All right. So do I think they're going to raise the debt ceiling? Of course, I think they're going to raise it. They have to almost. They're going to be ruining their own careers if they don't implement this. All right. But it is scary to think about the implications of this system and what could happen if the endless debt is not bumped up again and again and again, never ending increasing amounts of debt. And let's say the ceiling has continued to be raised, so they're not going to come after you. Well, you're going to end up paying for it anyways, because the more debt we have, the more other countries are going to see this and further pull away from using the US dollar as trade. Right? And I like to remind people of this every couple reports here. Most of the world's population, the countries that these people live in, most of the world is backing out or pulling away from the US dollar as their choice currency of trade. It hasn't fully happened yet. The US dollar is still the prominent currency used throughout the world trade, but that is dropping, and pretty soon it's going to be most of the world no longer using the dollar. Why do I say that? The populations in the countries that are implementing this, and the BRICS nations and more, those are actually, the population of those countries is actually higher than the United States. And the rest of the world that's still primarily using dollars as their choice currency of trade. All right, so what do I think, and how do I think we can fight back and profit from this? Well, by being ahead of the curve, I think precious metals is going to be re-implemented into the monetary system. So my favorite thing to stack right now, as far as that type of preparation, monetary preparation, is silver. You're going to see the cost of silver skyrocket. The cost of silver has been suppressed by banks, and a lot of these same banks have been buying silver and gold, but buying these same metals that they're suppressing the price on the paper markets and the derivative market, suppressing the price there, but yet buying the real physical asset. All right, so that tells you what the banks know, what's happening here with this global monetary system. Also, I'm investing in gold miner stocks, gold and silver miners. All right, I think that's going to be a good place to make some money in this. But another risk, and this is similar to people investing in cryptos, because I think those are going to go up too. But another risk here is going to be that your broker goes insolvent. And we don't have to go too far to see what happens. Look at all the crypto exchanges that went under. People lost, in some cases, several $1,000,000, and the total losses are in the billions of dollars, right? So it's like walking through a minefield, but it's also a risk if you have your money in the bank. Look at the FDIC. They said there's risks out there with the bank. They don't want to tell the public. FDIC doesn't have enough money to cover all the deposits in there, so they're likely going to have to do bail-ins. And this type of thing, the bail-ins have never been done on this massive of a scale to see exactly how it's going to work. Some people think they're going to take a little money from everybody. Other people say it's only going to be the people that have more than $250,000 in any institution or in all the institutions combined. So nobody knows exactly because it's never been done before. So as far as risk goes, and those people that think that keeping their money in the bank is going to be safer than keeping it at an investment broker or a stock broker or any exchange, there's also that risk that you have to weigh in to it as well. A lot of people also think that it's safer just to keep the money at home under the mattress in your safe, buried in the backyard. But there's also risks with that. What if your house gets broken into, right? So everything has risks. There's no one answer. There's no one solution as far as preparing for this. There's no one solution that's going to be best for everybody. So I try to have toes dipped in different areas here, keeping some money out of the system, keeping some money invested in the system, having an emergency fund, stacking real assets, becoming your own central bank. And I'll put it this way: if the central banks are stacking physical assets, I think that might be a good idea for us to do the same, don't you think? Right, and I've got a link right below down in comments here to SD Bullion. That's where I still get my most of my precious metals from SD Bullion. If I see a sale at one of these other exchanges or brokers, sometimes I'll go there. But SD Bullion is my go-to for at least the monthly purchase that I do. You also help out this channel a little bit by going to that link down there. All right, now as far as being prepared, we're going to talk more about that. But first, let's take a look at this article. People out there still arguing, if there's not a recession, if there is a recession. Take a look at here. This is a CNBC article and something here that we added to this. Half of the population in the U.S. thinks we're already in a recession. GDP growth, a false indicator, doesn't agree with them. So looking at the GDP numbers, they're saying, nope, it's not a recession. GDP is positive. Remember, GDP is largely based on consumer spending. So the deeper people go into debt, the more people swipe their credit cards, the better that's going to look on the GDP numbers. So do you really think we should gauge a recession, if there is or not a recession, on enormous debt that people can swipe credit cards? That's ridiculous, right? So don't look at that. Look at this article down here. CNBC, almost half of Americans think we're already in a recession. Even if we're not officially in a recession, people may be experiencing a personal financial downturn due to inflation. Yes. So one person may not be in a recession, but another person is. So this broad determination if there's a recession or not is meaningless. You may be doing very well. And many people, well, I think most people won't, but some people will do much better now during any previous time in their life, because when there's financial turmoil and market chaos and financial collapses, there's also opportunity for those that are prepared. And who does the best during recessions and during economic crashes and financial meltdowns? It's typically the people that are already doing pretty well because they have cash on the side. They can come in and buy when the time is right. Just look at all the people that bought when the stock market bottomed. They've been heavily rewarded. Look at people that bought when the housing market bottomed in 2011, 2012. If you held on to your property, you've been heavily rewarded. But there's going to be a lot of difficulty going through what's coming here, not just what's coming, but what's here now, this high cost of living, the inflation. It's going to be very difficult to have cash when this gets finished. And it's especially challenging because we have deflation in some areas, but yet inflation in other areas. So when your utility bills are rising, your insurance is rising, energy bills, when the cost of just the grocery store trip is rising. So we have inflation over here, but deflation in some areas, housing deflation, automobiles deflation. So yeah, very, very challenging times. And there's things that I do to try to stack away a little more cash. I think stacking precious metals is going to be huge. Silver is going to be, I think it's going to explode in price here at some point. Remember, the banks that are buying physical silver are also suppressing, many of them are suppressing the price of silver on the paper markets using using paper contracts. All right. What else am I doing? I got this app. It's called Fetch. You just scan your receipts from a store. It could be from a restaurant. It could be as little as a couple dollar purchase of some candy. It could be a whole grocery trip. You scan your receipt, you get points just for scanning your receipt, and it adds up. So far, I've gotten some free dinners out of it. I've gotten an Amazon gift card, and I've got a code down below. You get 2,000 bonus points if you sign up for this app using my link down below. Also, I try to use credit cards for as many things as possible. Now, let me explain. What I try to do is use cards that give out rewards and cash back. For example, the Costco card. If you use your Costco card, you get points for each transaction. But especially if you use it at Costco, I think you get 2%. And if you use it for Costco gas, I believe it's 4%. right? And those may not seem like big numbers, right? Just a few percent cash back. But if you do these little things in many different areas, it can really start, to add up. So link down below. Also, when it comes to credit cards, if you could pay off your card in full each month, it's worth it to get the points. But if you're putting too much on your credit card and you can't pay it off in full each month, that's not good because the interest that you're paying is going to outweigh or be more than what you're gaining in credit card points or cash back rewards, right? So that wouldn't make much sense to spend more and not pay it off in full. So hopefully everybody's still paying off their credit card in full. That's going to be one of the keys, staying out of the debt and stacking and having cash and having precious metals. As far as I'm concerned, those are some of the most important things you can do. We also have the safety aspect to it because society's breaking down with more people, getting desperate and doing desperate things. So we're going to wrap this one up today. Hope everybody liked this report. We'll be back either Sunday, if not tomorrow, which is Sunday, definitely Monday with another economic financial report. Please let me know what you think down in comments. About half of the people think we're already in a recession, regardless of what the GDP number print tells us, what's really happening or what's not really happening in that case with the manipulated number. Also, what do you think about Miss Yellen's warning, catastrophe, unable to pay out these programs? What do you think about what she's out there warning? Sound the alarm and batten down the hatches or what? You let me know. Thanks everybody for being here. Big love. Keep stacking. Bye for now and peace.